Thanks so much. All right. Questions? Okay, good. All right, thanks so much. Let me dive in here. I know we need to be right on time here. That's how we roll. So let me just hit full screen. Okay, guys, you can see opening slide and obviously hear me. Just type in a quick, don't say yes. Tell me where you're dialing in from, where you're logged in from, and I'll pick out some of the best ones. And we'll get rolling. So, okay, ready, go. Tell me where you are. Okay, we start off with the UK. There you go. Dallas, Seattle. All right. You guys are quiet. Perfect. I'll liven you up. So, guys, we're going to talk a little bit about trading with Fib here. I am a big believer in trading with Fib. I like to take a practical approach to trading Fib, setting up actionable trades. I am a trader. I've been a trader the entirety of my working years since I was 22 years old. Even started trading before that, so I'm in the industry I've always wanted to be in. Oh, there's a good one. Sweden, Hampshire, Germany. There we go. Africa. You guys aren't messing around. All right. So let's dive in here, guys. Got to do the warning. You know, I'm a trader, guys, who will tell you that this is a difficult game. You got to accept the risk before you dive in. I'm the guy who'll tell you this is more like a boxing match where you're going to try to win the 12-round decision. You never go for the knockout punch. Throughout those 12 rounds, you're going to get knocked down on your butt a few times. You got to get back up, keep swinging. This is a game that can only be won with some intestinal fortitude. So it's not about being right. It's not about having a secret indicator. It's being cool with some methodology that you need to settle with. The methodology search is such a small part of really what you need to do to become a good trader. Find what works for you. I've spent, you know, the first 3, 4, 5 years of my career searching for that methodology that works for me, and I've been that way ever since. I'm now a profitable trader. I've traded for a hedge fund. I'm trading my own money now. I started out trading for a living when I was 22 in San Diego, as Renee mentioned, and you know, it's all about refining myself. So that's how you're going to hear it from me, guys. It's not about the special, latest, greatest indicator. It's about you being tough and you wanting to make money in this market is what it comes down to. So this is not get rich quick. This is something that you're going to have to work towards, and you really got to enjoy it. Okay? So that's the best and most eloquent CFTC NFA disclaimer I can give you guys. So let's talk a little bit about this, some myths and facts. We're going to be talking about technicals and specifically Fib. And before we dive in, who right now is using Fib? Just say yes, no, I know enough to be dangerous, I think it's voodoo, I think it's evil. Let me know who's in there right now using some Fib. While you're answering that question, a couple myths we could look at. Maybe myths, maybe they're facts. Technicals don't work when markets are highly emotional, and technicals are self-fulfilling prophecy. Have you ever thought that? Have you ever said that? Let's take a look at a very interesting chart example that maybe would shed some light on those myths or facts. So the Dow from 1923 to 1929, you guys knows what happened next, right? Crash. Market just gets rocked. So the Dow sells off from 386 all the way down to 200. We bounce up to 300, nice bear market rally. We sell back down to this level again before we eventually break through it, and then we come back to retest as resistance, and then we sell off. So what is this level? Besides 200, this happens to be one of the key Fibonacci retracements that we'll look at here. This is the 61% retracement of the rally from the roaring 20s. Right? So back to the prior screen, technicals don't work when markets are highly emotional. Let's think about that one. I don't think the young country that was only 140, 150 years old have ever seen an emotional market like that before. So it worked then. And then the other one is technicals are self-fulfilling prophecies. Let's think about that. It wasn't until the 1970s or 80s that Fibonacci was actually applied to the trading market. So I don't think they stopped crashing the Dow in 1929 because it was the 618 retracement. So I think right off the bat we can dispel both of those myths right there. Yes, technicals and specifically Fib do work when markets are highly emotional and volatile. It's emotion which makes these patterns and makes technical analysis as a whole work. Okay, and in the self-fulfilling prophecy, I think to some degree Fib can be a self-fulfilling prophecy, but most times it's not, and I'll show you a key example of when it will be. All right, so awesome, Mike. I appreciate that. Those are kind words. Yeah, it's so much fun. So I'm going to skip this because we're on such a tight schedule. My wife Trish, Jake, and Brody, they're 2.5. They're taking a nap. I used to work on Wall Street, but when I met my wife, I knew I wanted to build a business, see the kids grow up, hopefully hand this business to them. I met her in Hoboken when I was working on Wall Street, and this guy was at my wedding. Long story, I'll have to save for another time. Half you hate me, half you love me, but whatever. We'll leave that story for another time. So I run the business at home. This is me actually standing up at my desk right now. The boys come down and try to unplug every wire and break all the stuff. So I run the business out of my house, out of my basement office here in New Jersey, and the boys are increasingly being more mobiles, which means I might have to get an office somewhere. I do a lot on CNBC, if you guys have ever seen me there. I do it about once a week for the last 5-6 years. I'm actually going to be on Squawk Box tomorrow morning at 6 a.m. I don't know how the hell I'm going to get up that early, but we'll make it happen. So you guys may have heard about this. I made a call on CNBC publicly. When I was at 42 bucks, I said oil is going to 26. So they brought me, Brian Sullivan brought me back on, and I basically said that oil would stop at 26. And Brian's saying, you were off by a nickel. What happened there? So this story actually went viral, and you guys probably heard about it. It was the #1 story on CNBC.com as well as Yahoo Finance. So when oil was at 42, I said it'd go to 26. I did a whole piece for research customers, which was actually just a very elaborate, fancy chart that is really just a Fibonacci projection. Okay, basically, if you take the credit crisis drop in 2007 down into 9, project it from the reactionary high in 2011, you did a simple Fibonacci study, you in about 30 seconds could have called the low in oil as well, which is $26.15. So these are a couple of grand examples of how Fib does work on these big picture volatile moves, but I trade it from one day to the next. I'm a swing trader. I like trading options. I will day trade the markets when there's volatility and there's opportunity. That is my background as a day trader, but I did position it. I did push my time frame out a little bit to swing trade with options. I like holding trades for a couple days to a couple weeks, depending on good Fib and Elliott Wave setup. I like to sell options. I like to buy options. I like to trade them directionally. With these tools that we're giving you, you have an edge up over most option traders who aren't very good at direction, and you can take far better trades than just selling options that are way far out of the money, taking huge amounts of risk, if that makes sense. Okay, so this is actually the chart I sent out to customers. I did a whole video about it, about how oil is going to 26 from this mark right here. So yes, this stuff does work. It's great for trading. It helps you plan your trade. And I think at the end of this presentation, you guys will see that my whole point to you will be to have a plan and to think ahead. Plan your trade, trade your plan. This is much too tricky of a market to just sit down, your butt in the seat, and just start banging away at the keys, buy, sell, because you'll get chewed up. You got to have a plan in here. Okay, and I'll show you that even a poorly laid out plan is better than no plan at all. Trust me. Okay, so that's that. So let me just do this quick, all right, because again, they keep us pretty tight on time here. So when you first start trading, and I know a lot of you guys in MTI, you guys are learning Fib. I know the boys there really get on it, which is great. So I probably don't have to harp on this very much. But when I first started trading, of course, you have all the indicators up in your chart. You're watching these things go, and stochastics turn down, and then they come back, and then MACD turns, and you're like, wait a minute, which signal do I follow? and you use those for a couple months, and then you switch to a couple new indicators, and you realize these guys are just kind of conflicting and contradicting each other. These indicators are reacting to price action. You're trying to figure out which signal to take. Like, I've never figured out how to make any money with this stuff. I really don't. I mean, I'll use indicators, but pretty much indicators just tell you what you already know. In my opinion, in today's markets, you can't wait for all these signals and decipher all these signals that cause you to hesitate in price. All right? I think you need to get ahead of the market and anticipate your entry ahead of time, and if and when you get into that zone that you've identified hours ahead of time, then you have a very specific entry price. You take the signal, stop goes just below the zone of fib support, and hopefully the trade works out for you. Okay, not all trades work. I'm the first to tell you, if I get stopped out, I will probably take a stop just below the zone of fib support. If it works, hopefully it's as effortless as this, and this is an actual trade I took in ITB. McDonald's, another example. We have an anticipated zone of resistance. I also had this trade on. Okay, once you move it in the zone, you get the signal, boom, you're in. Tight stop. If I get stopped out, no problem. And then this one works. So that's the trade that I like to do. I like to anticipate these ahead of time, take the emotions out. I'm a pretty hyper guy. I used to buy and sell way too much and chop myself up. But I really needed to find a way to slow myself down, put myself in good positions, anticipate the trade, and I pretty much 90% of the work goes into a trade before it ever, $1 ever goes into the market. So that's what we're talking about here. So yes, I do trade. I do trade this stuff. I trade my own capital. This is my live trading account right now. I'm down $1,200 today, but I'm up 2,200 on open positions right now. So I am net long the market. We just added a TLT position to start to hedge. I can actually show you. There's my TLT right there. I did 20 of the 140, 142 call spreads and bonds to start to hedge my long portfolio because we're starting to roll over. All right. And actually I have more like 3,000 in open profits right now. This GoPro is a stinker I've had on for months. So, okay. So let's roll. I am going to go through this very fast, but normally in a normal hour-long presentation, I'll do a little bit more of an elaborate, dramatic story here. But you can counter-trend trade with this stuff, okay? Most of the teachings out there say you should only trend trade. I think for the most part, that's true, but there are times, 1 out of 10, 2 out of 10 trades that you should counter-trend trade the market. And this was one example. This was a little obnoxious. We got lucky on this one, but we did anticipate a reversal in GMCR down in this zone from 42 to 37 bucks. We bought the first pullback and we put this option strategy on, which is actually quite aggressive. All right, we decided to get aggressive on this trade. Sent the trade alert out to customers. That's the trade. GMCR did rally from the zone of fib support and actually got bought out. It was lucky. So we had options that we bought at 85 cents that were sold at 32 bucks, which was a 3,600% return. So, I had clients who were trading 2 and 3 lots who made $20,000, $30,000 on this. They're trading $10,000 accounts. So it was awesome. Very lucky. Doesn't happen often, but you can counter-trend trade with this stuff. But the point is, this guy worked. There was a zone of fib support. Earnings came out in GMCR, and they were bad, and the stock gapped up. So I was like, ooh, here we go. So that's when I bought the pullback, just looking to get up to this little fib objective, and then the stock opened right there. So that was awesome. There's nothing that makes me happier than making my clients a ton of money. And that was just at the end of last year. So, okay, so enough of that. The way I look at fib, guys, is it's your trade plan. Okay, it's not a map like your chart, but it's the little scale down here in the chart that tells you how long the journey should last, and it helps you plan accordingly. If you're an options trader, it's great because it helps you pick out the perfect expiration as well as strike. Okay, I think too many people just kind of haphazardly pick strikes and expirations, not really knowing how long the move should last, both in price and time. And fib helps you do that. Okay, so one of the objectives, which is very, very valid, is it's so subjective. You know, where do I start and stop my levels? And there's all these different ratios. How do I know which one to use? If you're thinking that, good for you, and I totally agree with you. Most of the fib teaching out there is too subjective. You can't really trade from it. So here's where we're going to talk about swing waves. Okay, real simple. A swing wave is a swing wave high is a high bar with a lower high to the left and a lower high to the right. Simple. A swing wave low is a low bar with a higher low to the left in the prior bar and a higher low in the following bar. These swing waves won't be formed until this bar closes and the new one opens. Then you have a confirmed swing wave. And this is a basic concept that is in most technical analysis books. So we got to take it a step further and start to define the significance of each swing. And this is a proprietary way that I invented to help you very quickly figure out where to start and stop your fibs. We'll use minor swings and major swings. A minor swing is a higher low that's not exceeded in the 5 bars before and after. A major swing is not exceeded in 13 bars before and after. So here's what it looks like on toss. So you have a minor swing wave high. There's a high bar with a lower high in the prior bar and a lower high in the following bar. So there's a good swing. And it's also not exceeded in at least 5 bars prior and 5 bars following. So it's given a pink dot. A major low, okay, swing wave low, higher low to the right, higher low to the left. It's not exceeded in 13 bars after this and 13 bars prior to this. So that gets a purple dot. Or sorry, gets a blue dot. So it's an indicator that I built for all the major charting packages. Not a big deal. You don't have to count off all the bars. But it's through these purple and blue dots that I start to figure out where my Fibonacci begins and ends. So what we're going to do is use all these clusters. We're going to begin forming clusters of support and resistance using these purple and blue dots to figure out where the market's going. Yes, Robert, that was toss. I have it built in toss. And there's Amazon right now with the purple and blue dots right there on Thinkorswim. So that's the indicator and it's built. Okay. So okay, there we go. Another quick one, and again, I apologize I'm going so fast, but we're going to get through this. 55 EMA is the slope of the market, is the trend. Okay, if it's starting in the bottom left and the MA is up at the top right, you have an uptrend. This is a downtrend. Very simple. I don't care if price is above or below the moving average. I just care about the slope of the MA. That's pretty much all I use for moving averages. I think the rest of them are kind of useless. So retracements just simply help you to do the following, which should be about 80 to 90% of your trades, which is to buy short-term weakness in rising markets and to sell short-term strength in falling markets. Fibonacci retracements help you to do just that. So we want to identify the trend of the market with the 55 EMA. Stock goes from $200 to $300. That's a $100 move. The retracement is designed to figure out how far this correction will go against the established trend. So if it's a $100 move up in this stock, $38 would be 38%. $50 pullback is 50%, so on and so forth. Pretty simple, right? But the big question is, how do you know which one of these levels is going to hold support, right? That's the million-dollar question. So I will cut right to the point right now and tell you, you can't know when you're just using Fibonacci retracements. Okay, you can't know. So there's a pattern we're going to look for when we're using just a single Fibonacci study. And that's a very powerful but very simple and well-known pattern, which is called an ABC entry. It needs to occur between the 78 and 38% retracements. So between 38% and 78% of the prior trend. Now, how do you know where the trend begins? I'll tell you right now, and I'll talk about it again in a second. You're looking for the prior blue dot to blue dot trend. That is the most recent trend that you want to study with your retracements. So here's the ABC entry, okay? First pullback, and I'm going to save you guys money right here, okay? So many people are studying technicals, and they're like, okay, I don't want to buy the breakout, which is good, but they wait for a pullback, and it goes back to like a moving average or old resistance that becomes support, or you get a stochastic turn-up or some kind of MACD signal or indicator signal. They buy here. Market goes up, they're like, okay, perfect. I just bought the pullback, and this thing's going to break the new highs. More times than not, in today's markets, which are much more competitive than they were 10 and 15 years ago, there's a false break. Okay, they're going to try to suck as many breakout buyers as possible into the market. Then what it'll do is go down, stop as many people out below this initial low, annoy as many people out of the market and frustrate as many people out of the market as possible, and only then will a low be found, and we're looking for a long setup. So for me, I almost never buy the first pullback because more times than not there's a false break. Sometimes it'll make a slight new high, sometimes it'll make a just fall short of the old high, sometimes it'll do double top, but I always wait for that clear failed breakout followed by a stop run, frustrate as many people out of the market as possible, then it goes. Okay, so here's a simple setup that I just traded for the purposes of this presentation. So we have a down, the initial reaction, there's your false break in the S&P, and then we drop down. We're into a nice zone of fib support right around 1970 in the S&P. This is a 39-minute chart in the S&P, 1970. I bought some deep in the money SPY call options just as a day trade. Bought them at $3.98. So there's the 1970 all the way down on the 1-minute chart. And look, here's another ABC. We go up, down, there's a first pullback, there's your false breakout, there's your stop run, frustrate as many people and stop as many people out. That's when we bought the market down into here. Okay. Market then begins to recover, and again, it's all off the 1970 level up on that 39-minute chart. This is a 1-minute chart. So we did an ABC inside of an ABC. From 1970, we traded up to 1980. I had 10 points in just about 2 hours in the S&P. Started to take profits in those call options that I bought, and I actually did a video of just taking profits on the balance, which I don't know if it's going to play. Oh, there we go. Okay, so bought them at $3.98, sold them at $4.73. Just a little, you know, just made a little dollar, made 33% on some SPY call options over 2 hours, just off of an ABC. So the point of me showing this example is you can trade this on a 1-minute chart, you can trade this on a 30-minute chart, daily chart, any time frame, any market. We're day trading SPY call options in there. That's it. Okay, so the time frames that I like to trade are up here on the 3-hour. I'm more of a swing trader. So let's just go through a setup, right? So the 55 MA is up, so you're immediately thinking longs. And I'm watching questions at the same time. EMA is exponential moving average. Pedro, I'll show you how to get a hold of that indicator. Is it possible the end of V surpasses end of wave 5? If yes, absolutely, great question. If it's just let me go, I'll answer that question on the next example, but good question. Okay, so here's the first pullback. I don't see any attempted breakout. Okay, so I can't buy this pullback. I cannot, I will not. Sound like when I'm reading like green eggs and hams to my kids. I will not eat them in a box. I will not eat them with a fox. I think I'm going crazy. Identify the most recent major swing wave high. Okay, so we have the first pullback. Now we need to put our Fibonacci retracements up. Here's what you're going to do. You're going to wait until you find a blue dot high. This will not appear until you have 13 bars to the right. Some will call that a lagging indicator, and I will absolutely call that a lagging indicator, and I'll tell you why it's a good thing. It makes you wait. It makes you be more patient on pullback trades. Too many of us are just on the first sign of a pullback, we're in. We'll buy this bar. Okay, we'll buy this guy. It looks like a big old outside bar reversal, and then boom, we get stopped out. We get pissed off. We're like, oh, forget it. Okay, then we try again. Goes up. Try it again, we get stopped out a second time, and then we're really not going to take the trade. But for retracements, you will find a blue dot high and then just simply find the most recent blue dot low. You're going to click that guy first, this guy second, and then your Fibonacci retracements are going to unfold. So here's the pullback. Here is we attempted to break out. This guy didn't get very far. We did a double top, tried to get people involved for the breakout. Now we're hoping to get a stop run below this low. Are we going to get it? Oh, we got it in a big way. Huge bar down, comes back, and this is where I take my entry. What I'll do is whatever time frame I'm trading, this is a 3-hour, I'll buy the breakout above the low candle. Okay, so every time we make a new low candle, I'll just look to buy above that candle. This one wound up being the stop run bar, was not exceeded, so if we take out the high of this candle, which we did right here, you're in. I like to put stops below the 786 retracement. Okay, now if you look at this chart and you're like, okay, $437 down to $420, right? $17 stop. If that's too big for you in Amazon, the 3-hour chart is not the time frame for you. You know, you would try to trade a smaller little move, maybe on the 15-minute chart. Maybe there's an ABC pullback here on the 15-minute chart that might only require a $2 or $5 stop, right? So here is a Starbucks. And Pedro, I'll go back to your question. I won't forget it. Starbucks. So we know the trend. The moving average is up, so we're in an uptrend. Wait for the trend to pull back. So we have a pullback. It looks like they're trying to suck people in here. I like it. Let's see if we can get a stop run. Okay. We then find the first blue dot high, find the next blue dot low, the prior blue dot low. That is where you start and stop your Fibonacci retracements. Okay, it's very, very objective. Okay, there's no questions. That's the most important trend swing that I want to keep an eye on of where I start and stop. Okay, so you click the low first, the high second, and now let's look for our ABC pattern. Down, beautiful false break, trying to suck people out of this breakout. Gap down, okay, the gap down, and then the next bar takes out this high. This bar did move above, we're in. I usually put a stop at the 786, just below the 786 retracement, and you're long. This was an actual trade we took as well. New trade alert. We bought the 52 weekly calls that expire in 16 days, sold the 53 halves that also expire in 16 days. 78-cent debit for $1.50 wide call spread. So pretty much a 1-to-1. And the reason we sold the 53 half calls, I will explain to you for the next fib tool that we'll talk about. Okay. This one worked pretty well. We got right up to the target, and then actually sent the text message out, just keep some of the long calls because this thing just kept going. Let's keep half of our 52 calls. So that one worked pretty well as well. And I'm showing you winning trades, guys. I promise you I have losing trades. I have stops. It's part of the business. I'm just showing you that good pre-planned trading should be pretty effortless. Okay. So, yeah, Pavel, it's candlesticks or I use the high. So if you're using open, high, low, close bars, it's the high, or candlesticks is the high. It doesn't matter which one you use. All right, so let me show you the TLT trade we just put on. You'll see the setup. Let's go down to a 4-hour. Probably a little better there. Come on, toss. Don't be shy. Okay, so here it is. So we go down. There's the false break, and we're waiting to buy the highs, right? We're waiting to buy a move above the high bar. We were trading this on a 3-hour. I don't know why this guy isn't coming out. There we go. I'll just do a 1-hour. It's fine. Okay, so there's the blue dot high. Now, where's the most recent blue dot low? This is right at price, but this guy was exceeded. Okay? You can't break below. We've got to find a blue dot low that was not exceeded, and here's your most recent one. So we're going to go to fib retracements, low to high, and then here's the 3-wave swing. Down, there's your false break. We gap down, okay? We just put the trade on today. Kind of watched a little bit of an inverse head and shoulders here against the 50% price retracement. So we did a 140, 142 call spread that we just sent out to clients, which 140 TLT right there. So we did a 140, 142 call spread. We bought an out of the money call spread, and I'll show you why we did that. Okay. If we start breaking below here, below the lows, I'll probably start reducing the position, and then I'll stop out the balance below the 786 down here. There's a long way to go all the way down to the 786, so sometimes I'll just put it below the low of the pattern, and I'll probably stop out if we get below that, okay? But if it's a deeper retracement down into the 618 or a little lower, I'll just go ahead and put it below the 786. Okay, you guys okay with that? All right, fib tool number 2. How am I doing for time? Ooh, we gotta move. All right, extensions. Let me skip through this, and let me just show you with pictures. I think it's easier with pictures. So, how we doing? How we doing? Okay, now this is Netflix. Can you see the 3-wave swings? Down, up, down, down, up, down, A, B, C. Retracements, what we did was we'd measure the trend wave to figure out how far the correction was going to go. Extensions are going to wait for the ABC to complete. We're going to study the ABC correction against the trend, and then we're going to try to figure out how far the next trend wave is going to go. So extensions are used to find out how far the trend will extend, and retracements are used to figure out how far the correction will retrace. So you're going to identify the ABCs, and there's actually 3 of them here, 1, 2, 3. You're going to use the exact same tool. You're going to use a retracement tool. You're going to click the beginning of the ABC, the end of the ABC. Okay? Once this chart, which is Netflix, there's a test of the 786 retracement, which is key. Once it gets through a 100% retracement, it's no longer a retracement. It is now referred to as an extension. And the first extension you really want to keep an eye on is the 1272. There's a key mathematical relationship between the 786 retracement and the 1272 extension. I don't have time to go into it right now, but there's a lot of good trades that are made up of a move that starts at 786, a lot of times we'll go to the 1272. All right, so those are extensions. You can do it with this little ABC. You click the beginning of this ABC, the end of this ABC, and look, we went double top right into the 1272 and then sold off. Okay, so here's how we manage the trade. All right, we have an A, B, C. We take out the high of the stop run bar, which is right here. We're long. I put a stop below the low of the pattern. I like to book partial profits into the 786 retracement of the A, B, C. The reason being is sometimes the 618 retracement acts as a stop run target. There are times where I think fib is a self-fulfilling prophecy. People try to run stops through 618. And if they do, they're trying to fill a big sell order at a higher price. They're trying to run stops through 618. By the time they're out of juice running those stops through the 618 retracement, they stop at the 786 and it drops. So I want to take some profits off the table at 786 in the event it is a 618 stop run. This one, they tried to run stops through 618, but eventually this big bar got it, and then buyer, oops. Annoying. Okay, eventually buyers did get going, and this guy went all the way through the highs up to the 1272. After you book some profits at 786, trail your stop to the most recent purple dot, minor swing wave low. I don't have the dots on this chart. I need to update this chart, but trail your stop to the most recent purple dot, then book partial profits into the 1272. Okay, so if this was a $10 drop, you're long here, you have a $7.80 rally into the 78% retracement, book some here, book some up at 127%, and then if you have a few lots left over, try to keep it for the big breakout. But if you're looking to hit singles and doubles, this is a beautiful ABC trend pullback strategy with predetermined retracements, take profits. This is basically a trend trading system that you can use using Fibonacci. Okay, so that is all about the art of the trade, account risk and trade management. Perfect execution every single time. Account risk and trade management, ART. So guys, in like 35 minutes, I just gave you a 9-step beautiful trend pullback trading system using Fib. Okay, I only scratched the surface on what we've done with Fib just because of the time, but there is a 9-step trading beautiful trend pullback strategy for you. What am I up? 23. Okay. I'll talk about it quickly, but those of you trading, who's trading options in here? How many of you yes on options, no on options, interested in options? Let me know. I know probably a lot of you are Forex, aren't you guys? Okay, few yeses. Few yeses. The rest of you are sleeping. That's cool. Okay. So the way that I pick my short strike for debit spreads is I like to go just above the 1618 extension of the correction. So this is that Starbucks example that I showed you. Gap down, we bought it, we did a 52 or 53 half, 55 call spread. I like to get up just above the 1618 extension of the correction. So all the time we'll do a 53 half, 55 call spread, right? The TLT was a little different, okay? We did, on the TLT trade, we did a long 140s, short the 142s. The reason we did that was, look, I'll get rid of that. Okay, there's the 50% retracement. It's kind of a big spread. If I'm just going to do a retracement of the ABC correction. I'm going to make it a different color. Make it blue and get rid of everything. Put 786 and everything else. Okay, it's kind of a big spread to go at the money 140 all the way up to 145. It's not bad, but a 140, 145, I'm not quite ready to put on that kind of trade yet. So what we did was we're taking this ABC trend pullback in 2 phases, right? This is going to be phase number 1. We did a 140, 142 call spread. Text. Phase 1, a 140, 142 call debit spread. And then if we get through 142, if we get through 142, then we'll go into phase 2 of this trade, which is like this. Text. We'll roll the trade up and out and do probably a 143 to 145 to get up to the 1272 or maybe the 1618, which I don't want to get out of the screen. Call it a 142, 145 to 146 call debit spread to get up to the 1618, which is going to be, let's see where that guy comes in. Oh, that's all the way up at 147. That's all right. Maybe do a 142, 147, do a $5 wide call spread to get up to that next little zone. But that would be a pretty big move. So we're just doing it in 2 phases. Okay, so phase 1 and phase 2. All right, so let's get back. I'm not going to spend too much time on options because I don't think a lot of you guys are doing options. But that's how we'll do it. Okay? Hey, thanks, Ken. I appreciate that. Very nice. Okay. Not easily available in Portugal. Totally hear you there, Pedro. Ken from Tucson webinar is always great. Always like your video. Vlog a lot. Thanks, Ken. I'm actually working on another one right now. To get much higher, rates would have to go lower to new record. Well, there's negative interest rates all over the world. I don't know why the U.S. is any different, right? All right. So let's keep going here. That's just a call debit spread. We talked about that. I'm going to skip through this example. We did it with live. We also do this with time. Those of you who are trading options, or those of you who like to kind of set expectations, be like, all right, I should be in this trade for 13 days or 10 days, or this is, how long the market's moved in the past, how much time it's taken, and we'll need to have an idea of how long you're going to be in the trade. I think that helps to kind of manage your expectations. All goes back to planning your trade, trading your plan, managing your expectations, keeping those emotions to a low, and taking as much kind of work out of the trade as possible. So I won't have time to go into the time aspect of Fib. We'll have to leave it for another time. The point is, guys, we want to stop listening to people like guys on CNBC. It's like oil's going to 26 bucks. You get short down here, rallies against you, stop yourself out, and then it goes to new lows. You're like, oh, it's so annoying. If you just wait for the ABC pullback, you're short up to here, take some profits in the 786, maybe get stopped out of break even. You're like, all right, no big deal. Much better than being short down here and stopping yourself out up here. It's all about having a plan, right? So this is a game plan. This is what I'm trying to offer you here. I have a nice little competitive Fibonacci training course if you're interested. It's all about setting up actionable trade plans. It's enjoyable, comfortable trading with a repeatable process, okay? Anticipation is the ultimate power. Losers react, leaders anticipate. So I'm going to skip through the fluff. We have a beautiful course packaged up, ready for you to be viewed right away. It's called Precision Timing Your Option Trades Using Fib. I'm going to go through all of this content, all about options trading applied to Fib. If you're not an options trader, you will benefit from it. I traded my account live for 3 weeks, each Wednesday, recorded it. It's all ready to be viewed right now. Okay, it's not the Holy Grail. It is for people who like to have a deliberate trade plan, who like to keep things simple, and who want to have some actionable trade plans. Money back guarantee, as we always do, no problems. Here is the link if you're interested, tradinganalysis.com/fib, and here's everything you get. The 4 tools of Fib price, Fib time, option strategy selection tool, stop loss, and stop trail plan, checklist and cheat sheet, profit taking plan, 3 live analysis sessions, and you get the swing wave indicator. Those are the purple and blue dots. Okay, you can upload them to your charting packages, and you will be able to see the swing wave. So altogether, worth over $1,000. Earnings season special, we'll do it for 97 bucks. Okay, so if you guys are interested, hit tradinganalysis.com/fib, and you've got to type in HTTP. I believe that's what it takes. Let me just type that in. I think. Send to all. I'll type it in for you right here. Tradinganalysis.com/fib. Okay. So that is the offer. I believe I'm up against my time, so I'm going to have to leave it there. But I hope you guys found that somewhat useful. If you want to find us, we are at tradinganalysis.com, and I'm just trying that link to see which one works. Yep, HTTP tradinganalysis.com/fib. You guys are good to go, all right? I hope you enjoyed it. I appreciate the opportunity. And no fluff with Todd, says Thomas. No, we get right down to it. Let's see. I think HTTP works. Trading analysis, I'm just trying it over here, .com/fib. Boom. Yeah, they actually both work, www and HTTP, so they should be good to go. All right, guys, I'm going to leave it there. Be respectful of the next presenter, and HTTP work. Thanks, Thomas. Appreciate it. Yep, perfect. Thanks, guys, and thanks very much for the opportunity today. Have a great rest of the week. Happy earnings season.